It's Wednesday, August 2nd, 2023. Fitch's downgrade of the U.S. debt rating only caused a very minor flutter in the markets today. But fiscal strains will soon get harder to ignore. A lot of people out there, I've noticed, are very delusional with what is happening. Many people ignore it. Many people don't want to hear about it. People don't want to be negative. They don't want to get scared. They don't want to worry. Many people are just downright delusional. And this delusion is infecting their economic decisions. People better get back to common sense very, very quickly here, because they better be taking action, because we literally do have a Category 5 hurricane, financial hurricane, coming to the U.S. Delusion and hope is not going to save you, ladies and gentlemen. You better be taking action. Today, another reminder that things aren't so great. And I'm going to share a couple articles with you. Before I do, I spoke to a friend of mine today. We spoke for about 20, 30 minutes, and he had made an offer on a house a while back, and I'm not going to say his name, but he lives near me. And he said that they made a very respectful offer. The seller would not negotiate one penny. And he said, look, we're just going to renew our lease. We can stay here for another year, year and a half, and ride it out and see what happens. And I think that that's the best thing he could do. And I'm just thinking, the greed that we have seen in the last couple years in the housing market is absolutely disgusting. And there are sellers right now who still believe that this is last year, that this is last year's market. It is not. And greed kills. And we're going to see so many of these sellers who thought that their houses were worth this much, and they're going to find out they're worth this much. And I don't give financial advice, but as I told my buddy, if you were a brother of mine, if you were a family member, I would say wait it out another year. Who knows? We really have to base things now 30 days. So much is happening literally every day, but you have to evaluate every 30 days. And I think that 90 days from now, we're going to be looking at a whole different market. 6 months from now, things are going to look a lot different. Imagine what a year is, what things are going to look like a year from now. Do you really think that prices of homes is just going to keep going up and up and up when buyers can't qualify, when people don't have enough for a down payment, when they don't have a job, when their credit's being destroyed, their savings being destroyed, inflation is eating them alive? Where are the buyers going to come from? This now is a war of attrition between the buyers and the sellers. And the sellers, for the most part, aren't as savvy or sophisticated as, say, the home builders, who are discounting properties, throwing in all kind of incentives, buying down rates, all kind of incentives. Whereas the retail seller, they're not aware of what's about to happen to them. We saw this movie play back in 2007. The greed was all over the place, and by 2008, people got absolutely smoked. They thought that their house or their piece of land was worth X, and they found out it was worth a lot less. And that day is coming, and a lot of sellers are going to kick themselves and regret that they did not sell, because say that, like this property, I'm not sure how long that the owners own this property, but say they've owned this property for 10 years. What do you think they paid for it? I think the property was listed for $375 10 years ago. They probably paid like $100,000 for it, but it's not enough. They got to have $375. $350 is not enough. $360 is not enough. They got to have $375. The greed kills, ladies and gentlemen. But I think a lot of sellers are going to find out that they waited too long, and this isn't 2022. It's not 2021. That game is over. That ship has sailed. Prices are coming down. Sales in Southern California, the entire state of California, sales have absolutely collapsed, just like they're collapsing all over America for the most part. 90% of the real estate market in America, sales are collapsing. Yes, there are some areas, maybe in Florida, maybe some parts in Texas, maybe a lot of parts of Texas, sales have absolutely plunged, listings are rising. But there are some, little pockets where things are doing okay. But in general, the housing market, the real estate market, sales have absolutely collapsed. And we're going to see prices do the same thing because we're going to see more and more inventory, more new homes coming to the market, more Airbnb properties that cannot be rented, short-term rentals that are not being occupied are going on the market. Landlords who are sick of being landlords are putting homes on the market. And then, of course, you just have people who are aging and downsizing and people that want to move from one neighborhood to another or from a state to another state. And so we're going to see a lot more listings. Problem is, we're going to see a lot less qualified buyers. JP Morgan CEO Jamie Dimon calls Fitch Ratings U.S. downgrade ridiculous, but says it doesn't really matter. Dimon says it doesn't matter because it's the market, not the rating agency, that determines borrowing costs. Well, it must have mattered today because the Dow Jones was down almost 350 points, NASDAQ down 310, S&P down 63. So something must have mattered. It's amazing. And you have Larry Summers here, joins the outcry over Fitch downgrade. Bizarre, inept, he says. He also goes on to say, this Larry Summers says, the economy is strong. And I have to question that. Who out there, please comment down below, believes that this economy is strong? Strong based on what? How is this economy strong? I think that this, no doubt, is the weakest economy in my lifetime. I think it may be the weakest economy in U.S. history. It is being so propped up and so manipulated. And now you have Larry Summers and Jamie Dimon coming out. They're upset. But the markets didn't agree with them. Markets did not like the downgrade today. What did we go from AAA rating to AA rating? Markets did not like that. And so, we have trucking companies shutting down. We have banks shutting down. We have credit ratings going down. We have people being laid off, CVS laying off 5,000 people. But every day we turn on the television, it's the opposite. Everything's great. Jobs everywhere. Nothing to worry about. Economiccollapse.com. The beat goes on. Another bank has collapsed. Another trucking company has collapsed. And U.S. consumers are tapped out. This is a very, very bad combination where inflation's going up, companies are shutting down, and the average consumer, the average person in America has no money. Bad combination. You know what they have a lot of? They have a lot of debt. And we're going to see what works better in a depression, having debt or having capital. We're going to find out. A lot of people just said, oh, you should just, be spending money, run up debt, borrow money. It's all fun and games, but now people are getting hurt. The television tells us daily that the U.S. economy is doing fine. It is not. Heartland Tri-State Bank of Elkhart, Kansas, as many of you know, failed. On Friday, Yellow Trucking Company has gone belly up. 30,000 workers now going to have to look for jobs. How about the pension now? What's going to happen? I'll tell you what's going to happen in my opinion. Many of these people are going to take a massive haircut with their pension. And everybody believes that pensions are foolproof, 100%. They can't go down. You can't take a haircut. Well, yes, you can. And we're going to find out right here that many of these people are going to take a major haircut. Many of these people may get 40% of their pension, not 100, maybe 40, maybe 50. Yellow Trucking has gone belly up, as I said, $1.5 billion in debt, $729.2 million owed to the Fed. Remember, they borrowed a lot of money back in 2020 and already 3 years later in trouble. Since 2022, 15,000 trucking companies have shuttered. Think about that. In a year, 15,000 trucking companies have shuttered. Many of those are probably very small mom and pop companies, but 15,000 have shuttered, and we're going to see more of these companies go belly up. And as they go belly up, and as we're being told everything is good, as banks are collapsing and trucking companies are collapsing, and we're seeing all the indications that we are in big trouble. Cardboard boxes production way down. We're now looking at airlines. They're saying that flights are down. We're looking at the price of gasoline, as I said yesterday. Regular gasoline at Chevron and 2 stations out here, one in Indio, one in Palm Desert, California, $5.69 for regular gasoline. All while 61% of Americans are living paycheck to paycheck. Now, I've seen that number as high as 70. Now they're saying it's 61. Is it 61? Is it 70? Does it really matter? It's a lot of people. People are not financing purchases at 20% because they have other options. They're doing it because this is their only option. They are now dependent on 20% interest on their credit cards to go pay for essentials at the Walmart, at the grocery store, pay the rent, not because they want to, because they have to. 28% of Americans, get this, 28% of this country makes less than $25,000 per year. We are heading into a Category 5, ladies and gentlemen, and nearly 30% of this country makes less than $25,000. My biggest concern for all this, because people ask me, why do I care? Why do I care? Well, I care because I don't want to see people get hurt. I care because I know, just as many of you know, most people are not prepared for what's happening. They're already tapped out. They're broke. They cannot prepare right now for what's coming. And yes, many people overspent, lived beyond their means, went out, bought the Chargers, the Challengers, all the toys, took the vacations, ignored the warnings. I get it. But there are still a lot of people out there who are hardworking people who are working as hard as they can, paying their bills, paying their taxes, and they just don't have any money left, and they're in the red every week. And they cannot prepare for what is coming. And my heart goes out to these people. These people have kids. Families are going to get destroyed. People are going to get evicted. People are going to be on the streets. People are going to lose their cars. They're losing their jobs. They're going to lose their retirements. This is going to get bad. It's going to get really, really bad. And you could just watch today how quick these markets can change. And whether these markets go up or down, it doesn't really affect me. It probably doesn't really affect you because they're so manipulated. These markets are so propped up already. These markets should have collapsed a long time ago. But when you are juicing $7 trillion over 30 months into the markets, when you're raising debt ceilings and you're handing out cash like it's candy, the bubbles get bigger. And we just kick the can down the road, and we just extend this flat line longer and longer. And basically, this is just a death by 1,000 cuts. People are just getting sliced every day, every which way. And it is a horrible, slow death. And people are getting tapped out. They have no savings. They can't save money. They're going to get haircuts with their pensions. They're losing their jobs. How about opportunity? Is there a lot of opportunity out there like there was maybe 20, 30, 40 years ago? Absolutely not. We're seeing all that money sit at the very, very top of the pyramid, very little of it trickled down. And we're going to pay the price here with inflation. Do you really think inflation has gone away? Do you really think inflation is 3%? If you do, you are drinking the Kool-Aid. We are now watching fuel prices, gas prices, energy prices rise, and they're going to continue to rise. Mass layoff impacting 500 workers at Opelika manufacturing plant. That's Opelika, Alabama. Baxter Medical Manufacturing Plant produces components for dialysis machines, laying off 500 workers. Now, how are those people now going to pay their mortgages, pay those 20% interest rates on their credit cards? How are they going to feed their kids? Do they have 6 months put away for emergency? Probably not. Probably not. Most people never thought they would lose their job. Most people never thought that we would see an economic downturn because Janet Yellen said we probably never would. We were told that inflation was transitory. This is going to be very, very temporary. And people are finding out that this is far from temporary. Mortgage demand from homebuyers drops for a third straight week as interest rates rise. This is on CNBC. Bankrate.com today. I checked the 30-year fixed mortgage rate, 7.31%. Mortgage apps fell 3% last week compared with the previous week. Applications for a mortgage are 26% lower than the same week a year ago. 26%. Refis are down 32% from a year ago. If you're in the mortgage industry, I feel sorry for you. That would be like working at a graveyard. It is done. It is over. There's going to be a ton of carnage. There already has been a ton of carnage in the mortgage industry. It's going to get much worse. If you're in the mortgage industry, I hope you saved a lot of money. I hope that you're working some side hustles, because the mortgage industry is done. And it's going to get much worse. Most people are not going to survive it. They'll be back to their bartending jobs and working at Starbucks. Foreign buyers are bailing on the U.S. housing market. Foreign buyers are pulling back. Foreign purchases are down 14% from a year before. Now, they only make up 2% of sales in home purchases, but it's another indication that something's going on. So we are seeing a global slowdown, a global recession take place right now. And even people, foreigners who once were investing here are not doing it right now. And I think that when we look at luxury real estate down 24% year over year, wealthy people are saying, you know, it's not that we don't have the money, but this is absolutely ludicrous. It's ridiculous. We're just not going to be robbed. We'll wait it out. And people with money can wait it out. So they wait a year or two. Are they going to pay more or less for that property? Probably going to pay a lot less for that property they're looking at today, because these people understand that this market is unsustainable. It cannot keep going up. The buyers are not there. And the sellers at some point are going to have to break, and they're going to be forced to sell. Nobody talks about the forcing of sales. When you have 500 workers being laid off at one company, when you have 5,000 people at CVS being laid off, when you have all these people in the tech industry being laid off, when you look at people in the mortgage industry being laid off, how many people do you think are going to be forced to sell their house at some point, even though they have a 3 or 3.15% mortgage rate? It doesn't matter. They can't afford a 1% mortgage rate. They don't have a job, and they can't replace the job that they had. They're forced to sell. So we're going to see more of that. The foreign buyers are waking up to what's happening. The luxury buyers are waking up to what's happening. And they're just saying basically, F you with your stupid prices. They're way overvalued. You don't want to negotiate. So F you, we'll wait it out. See you in 12 months. Private sector added 324,000 jobs in July, well above expectations, ADP says. This on CNBC. This is going to give more fuel for the Fed to raise rates and to keep rates higher for longer. The Fed wants to see these numbers go down. They don't want to see these numbers going up. 324,000 jobs added in July. That is a 201,000 jump in hotels, restaurants, and bars. The Dow Jones estimate was 175,000. They were off by 150,000. Does this make any sense to you? Now, first off, do we even believe this data to begin with? I don't know. Kind of questionable. How does the Dow Jones come up with an estimate of 175, and yet the number comes in at 324? I mean, that's 150,000 difference. Unbelievable. Going on with this article, the service sector was responsible for 303,000 jobs on the month. So we now basically have an economy that basically it revolves around the service sector. Think about that. 303,000 of the 324,000 jobs added in July were in the service sector. Bars, restaurants, hotels. How in the world do we sustain not only the housing market, but the U.S. economy if everybody's working at hotels and coffee houses and bars? I don't get this. How is this sustainable? How could anybody ever buy a house if you're working in the service sector? Let me repeat this. 303,000 of these jobs of the 324,000 were in the service sector. Concerning. Now, I don't even know if I believe these numbers, but if we were to take this for what it's worth, it seems like now everybody's just working at hotels, bars, restaurants, and coffee houses. I don't know how in the world you sustain a healthy housing market or a economy for that matter. We're supposed to be a world superpower. We're supposed to have the biggest economy in the world, the wealthiest nation, but yet everybody's working at bars and restaurants and hotels. How long does this last? How long is this sustainable for? Please comment down below. A very interesting day. But at the end of it all, ladies and gentlemen, you have to evaluate all this for yourself. Come to your own conclusions of where all this is going. It does not look good. People are getting tapped out. People are reliant on credit cards. We are going to see a credit crisis here in the U.S., a commercial real estate crisis, a housing crisis. And these markets, they're very manipulated. But today was another reminder that even the markets can go down. And sooner or later, these markets are going to collapse, just like housing, just like commercial real estate, just like bonds, all going down. We look at the 10-year bond yield today, over 4%. Trouble is coming. The cracks in the dam are getting much wider, much deeper. And if you want to ignore the danger, go right ahead. If I live below a dam and I see cracks, and I see water beginning to leak out of those cracks, I'm heading for higher ground. Get ready, ladies and gentlemen. Things are really beginning to accelerate, and time is a very, very valuable asset, and we don't have a whole lot of it. Does that mean we have a week, a month, a year, 2 years? I have no idea. But take every day like it's your last, and make sure that you're waking up, you're preparing, you're getting in better physical, mental, spiritual, and financial shape right now, because you don't know how much time is left. I hope we have a lot more time, but I don't think we do. Time is running out, and it is a very, very precious asset. And when it's gone, when the time runs out, it's over. All you have is what you have. And I hope that each and every one of you is prepared the best that you can prepare. God bless every one of you. Thanks for tuning in. Please like, share, and subscribe to this channel. And as always, I look forward to speaking with each and every one of you. Stay safe and pray for this country. We need a miracle. We are in very, very big trouble.